Hey, with a lot of things happening globally and within the US, it is not a surprise that the market is shifting. Now, even though there are things of large magnitude happening around us, it's not doom and gloom as the people around us are talking about, and which we'll look at specifically. Now, today, I wanted to specifically talk about the rapid slowdown in the home price appreciation, the biggest increase in home inventory nationally. Then we'll talk about the increase in the number of price cuts that we are seeing. We'll also talk about the decrease in the number of homes going under contract immediately, that is within 24 hours after they launch on the market. And we'll look at the number of showings, which is an indicator of buyer activity on the homes that are currently on the market. Now, this is a predictor as to how soon or how much interest homes are having, right? And with all that happening nationally, we'll kind of tie it into what is happening in the three counties, Kings, Snohomish, and Pierce, so that you have the end-to-end perspective. Okay. Hey, Ravi with the Rams Group at eXp Realty here. It is great to connect again, and thanks for stopping by. Let's kind of quickly dive into what is happening in the real estate market, shall we? Now, all the things we'll discuss are primarily related to inflation, the interest rate hikes, the war that is going on between Russia and Ukraine, to name a few. Okay, and getting right on, the rate of appreciation is slowing down. This is with the home prices. Okay, and by the end of this year, it is predicted that it'll be fairly flat at 0%. What does that mean? Prices did start out in Q1 of 2022 to be escalating initially, and those gains will slowly and steadily get erased by the end of the year to zero out. That's what the experts are predicting. Now, as you may have heard, these were the experts who were predicting about 4 to 5.5% increase earlier. Now they're shifting their story. And as we're seeing, things are getting a little dismal week after week. Then moving on to inventory. Last week had the biggest inventory increase in over 7 years. Yep, it's that crazy. Last week alone had about 31,000 more homes come on the market, which is an increase of 7% over the prior week, and which was an increase of over 6.2% over the week prior to that. So all in all, about 13.2% increase in just 2 weeks, which translates to about 475,000 homes available nationally. Now, this is about a 55% increase from the bottom, which we were at on the 7th of March of this year, okay? Now, this is the most number of homes on the market in 1.5 years that we've seen. Now, the increase in inventory is not because all of a sudden sellers came out of the woodwork and thought, hey, let's go ahead and sell, right? It's because of buyers pull back that more homes that are already on the market are staying. Thought I'll share that perspective. Then shifting on to price cuts. They are increasing quickly. Now, 30.4% of the homes on the market nationally have dropped their price, which is a staggering number, right? This is in the normal range, however, in a most normal market, but it's the most that we've seen since 2019 and are rising faster than we've seen in many years. Now, experts who live, thrive, eat, breathe, and sleep on this data are saying that price reductions are expected to increase to about 40% by September of this year, which is in another 2 months. Yeah, that's going to be drastic. Now, let's quickly then change our focus onto the homes that go under contract 24 hours after they launch. Only 19.7% of the homes went under contract immediately. Now that is 1 in 5 listings, right? In March, it was 1 in 3 listings. It was 33% then in March, and now it's come down to 19%, a 14% drop. Then moving on to showings. Showings are down 24% year over year. As you can see, the yellow line in this graph has dipped. Now, this is for all of North America, by the way. Another interesting thing to note is that a recent report by John Burns Real Estate Consulting shows that owning a home costs 31% more, which is about $839 more per month on average, than renting it. Now, last year, they were roughly equal, and about 2 years ago, buying was way cheaper than renting. And as we all know, the inflation data just came out, which was at 9.1%, which is going to definitely have an impact on the interest rates. However, should we go into a recession at all, then the rates may pull back in a little bit. We'll see. Now, after looking at what is happening nationally, let us turn our attention into how things were impacted locally in the three counties, King, Snohomish, and Pierce. Now, whatever is happening nationally was felt locally as well. Sometimes more escalated, sometimes de-escalated. We'll look at the data. Now, the current data is current as of June of this year. That's what the latest is. And July's data should have the indicators escalate more. We'll see. Now, the number of new listings that came on the market in King County increased by about 7.2%. Snohomish and Pierce saw an increase of about 10 and 15% respectively in the number of new homes that came on. And when a market shifts, things always happen starting from the outskirts in this case, Snohomish and Pierce counties, before they come into the core King County areas like Seattle, Bellevue, Kirkland, Redmond, to name a few. And as the market shifts back again to a seller's market, things start going from inwards towards outward. For example, as the market is shifting, that is happening currently, more homes will come on the market in Snohomish and Pierce counties before the numbers in King County increase, okay? So that you have some perspective. Now, the number of new listings that came on in King County were less, as we saw. However, the number of homes that went under contract was the lowest in King County. It was about 34.4% compared to Snohomish and Pierce counties, where they were 29 and 24% respectively. Meaning more homes sat on the market in King County compared to the other two counties. And this could primarily be due to King County homes being priced more than those two other counties. Now, this caused more buyers in the buyer pool to hold off their purchase due to the interest rates going higher and higher. Now, talking about rates, there was a short-term blip downward in the last couple of weeks. However, with the impending rate hike that the Fed is predicted to do, it's going to only cause more homes to sit on the market as the mortgage rates go higher, right? Now, days on market in King County was just 9 days this June and was 10 days last June. However, in July, month over month, we'll see this go higher as we're seeing homes in the bread and butter price range in King County, which is about 800,000 to 1.1 mil, sit on the market for fairly shorter times than homes in the upper $1 million range. Home price escalations in King County year over year was less, which is a negative 4.5%, as you can see, instead of it being positive. We're definitely seeing many homes either selling at list, and also many sellers are getting desperate to even accept offers at list with inspection and financing contingencies on, which we haven't seen in a long time. Also, a majority of homes either receive one offer or no offers at all on the offer review date if they had one. Now, what does that mean? It makes the pricing your home accurately absolutely critical in this market. Then moving on to inventory of homes in King County, which increased by almost double, 1,593 homes last year versus 3,301 homes this year. Now, that's a 107% increase in inventory. Finally, we'll look at the months of inventory. Now, this is an indicator that shows how quickly homes are selling. Now, to refresh, months of inventory is a metric that tracks how soon the currently listed active homes sell, assuming no new homes came on the market, okay? Now, this number increased from 0.6 months last year to 1.5 months this June. With more homes coming on the market and staying, July should see this number go even higher. Now, even though the inventory is increasing and price cuts are happening, if you are a buyer, you have more choices to pick homes from and have the opportunity to lock the rates where they are. And they're still lower, by the way, before they head higher, right? And if you're a seller, on the other hand, one thing that is talked about in the real estate circles is that if you want to sell, now may be the best time if your circumstances call for it. And this is before things drift down further with a shrinking buyer pool that is happening in the market, okay? Well, that should tie what is happening nationally to what is happening locally. And if you found this data useful, consider subscribing to my channel if you've not already done so. And I hope to keep you in the real estate know. Now, all that said, I am keeping an eye on the market and have included the data for all the three counties, King, Snohomish, and Pierce, below for you to slice and dice. Should you have any questions, feel free to direct message me, contact me, email me, etc. And I'm happy to answer any questions you may have, share insights, get the information you need, etc. Feel free to use me as a resource. Now, until next time, there's only one thing that I would like to ask of you. You stay safe, and I'll talk to you soon. Bye-bye.